Hello friends, welcome to all, I hope you are well. Today, I will show you what are the wrongs that are made a lot, what is the right of them. Also, how do we profit when trading in cryptocurrencies and stocks? I will try to explain these. Nothing I say is investment advice. Now first of all guys, I'm on the 15-minute chart. I'm turning my candles into regular candles. It was high and ashy just now. Now friends, when we open the chart first, we don't need to open the indicator directly. We need to know where our price is. So even if I give you an indicator that will give you 100% gain, unless you simply know the little technical details, you can't even make money from that 100% winning indicator. First you need to understand this in monetization, you need to know certain information. Now friends, we are about to start you slowly from 15 minutes. Where are we going wrong? I will try to tell. Now I open my normal Fibonacci from here. I do nothing and select the first peak that catches my eye on the screen. Now when I open the chart like this is the first peak that caught my eye. I'm drawing a Fibonacci from here guys. I am making a place like this, look, as you can see. I took the top from the left, I took the bottom and pulled it. I'm done now. What am I doing here guys? I'm drawing two horizontal trends right away. I'm throwing it in that area. As you can see, I'm drawing it into this area at once. Why did I draw it in two zones? The price has always zigzagged here. So here you broke the trend. Broke the resistance here. The price stuck on the upper resistance has come down again. See, the price is going down right now. It came to support below. It got a reaction from here again, came to the support below. What is the most common mistake we make? The price breaks from here and we enter the transaction directly. Or we are trading in the middle. So we shouldn't get involved in the middle. If we are going to open a trade, we need to open trades on the support areas. Now on another issue, I'm throwing a support at the bottom. As you can see, I also draw a support here. I'm not drawing a resistance here. I'm done with this guys. Right now I've set myself a very good 15-minute support resistance zones. I won't change their color. Now after doing this, currently we have taken support, resistance, Fibonacci levels. It shows us how high the price will go here. There's also the Fibonacci retracement. It's called Fib extension here. I'm getting this. Let me get the screen like this for a second. I will do the same thing again. I'll take it from a peak again, but here I will touch three places. I got a peak, I got a bottom, and I'm getting a peak again, as you can see. I got it like this. What is this? It shows us where the price will likely drop. So let's drawing it over here, one is enough for us. Let's make it darker, let's make it red guys. The Fibonacci retracement shows us where prices will likely fall. As you can see, it has already opened the Fibonacci downwards. How the other Fibonacci was opening up. This one opened the opposite downward. As you can see, this helps us to predict how far the price will fall. I have now turned it off. And I'm here now. What am I supposed to do guys? The price has already reached the support zone in 15 minutes. Look, it's in the support zone and it's trying to hold on there. Here are the things I can do now. I enter the support zone, over there, buy. Even if the price is here, check it out guys. Even if the price is here, I will place the order here. Because if the price drops from here, this is where it will stop first. If it can't hold here, I'll enter an order here. Then I will place an order here. Why am I doing this? The price I entered in the support zone from here. And I made a purchase, I'm assuming I made a purchase. The price couldn't hold like here, but it fell down, as you can see. See, here is an example. Price dropping here, I made a purchase here. The price went down. Already 1, 2, 3 now that I'm splitting my money. I automatically divide my money to 3. I entered some purchases here. If it returns here with some of my purchase, I'll put a sale here. What I bought from here, I'll sell it here, guys. It didn't fall from here, I have a purchase here too. When I got the price from here 0.29. I'm giving an example, it fell here. And I made a purchase from here. I have a 0 to 28 average, not my 0.29 average. I'm giving an example, don't get too hung up on numbers. I'm just talking about lowering the average. I'd have a 0 to 28 average, the price says here, for example, C. Price hangs from here, goes here, returns here. This one is an example of this. So if the price turns here, it can't hold here, guys. Like here, price can't hold here. Coming and returning from here, back from here. What happens this time? It works on my second support order that I placed below. I lower my average. Couldn't hold on here. Now I come to my third order, so here. As you can see, I'll make a purchase here. For example, it could not hold here, the price returned after that. And lowers my average even more. So here is what I have to do. I divide my money by 3 by 4 by 5. So it depends on how many orders you place to support. So I place orders on 3 supports. You open orders for 5 supports. But the important thing here is not to trade with all of our money. To enter the transaction by dividing our money, friends. If we enter the transaction by dividing our money, we will already gain. For example, look, the Fibonacci we drew worked here too. Here, it went down to the support, passed the resistance from the support, and sold from the resistance. So we don't have to rush. You see the candle here, don't say I'll buy from here. Buy by dividing your money into supports. If you have 10 lira, put 3 lira here, 3 lira here. Have as little damage as possible because the average is falling. If you buy from here with all your money. If you stop here, our loss here will be great. So I'm giving an example, you bought 10 lira here, you sold it here. Here your stop will be 4 lira. But if you get 3 here, your loss here would be $1. For example, it would be a lira, so this is the logic of the average. So don't jump straight to the chart in a heady way, friends. And do not open the indicator directly after opening your chart first. First determine where the price is and where to enter the trade. After that it will be MACD you are using, it will be RSI, it will be stochastic. Becomes stochastic RSI, becomes Fisher. For example, KDJ indicator becomes an oscillator, it doesn't matter. After that, after you determine the chart, get support from the indicators. There is a very nice indicator that you use yourself. The indicator is giving at that time. But at that time the price is in the middle, don't follow that signal. Because why not obey? It is Fibonacci that will determine real support resistance trend for you. Because prices usually rotate and rise according to the Fibonacci number sequence. It drops accordingly, so if you buy it because your own indicator gave it away, you can tell it's fake. If both the price has come to support and your indicator gives buy signals at that time, its win position is higher. Because the indicator you trust gives you money. In good places at support levels. We can reinforce them this way, friends. In the same way, these are taken into account when trading in 5-minute and 15-minute periods. Now I've shown this here, let me show you 5 minutes of the same graph. Let's open a 5-minute chart. I showed it here for 15 minutes. I'm giving an example in 15 minutes, the price is here, it's inflated. There is a resistance here, the price is inflated here. You can buy support here if you already have technical knowledge. For example, if you have technical knowledge, you can enter a short order here. You trade bearish because the market is bidirectional. Because what you do this time, on the contrary, you enter support purchases above. So you enter support buys at resistances. You can use it both ways. Now I open a 5-minute chart of the same graph. When I open it for 5 minutes, friends, when we look at the Fibonacci support and resistance levels that we drew in the 15-minute, we see that it actually works very well in 5 minutes. Look, the support and resistance zones are moving in a continuous zigzag pattern. So actually here we understand that the market is horizontal, and in a horizontal market, we can use it in a very nice grid. We can do it on sale. So buy at support and sell at resistance. We can make good profits by shorting the resistance and selling at the support. Prices turn from here and hang down to support, and going from support back to resistance. So what I really mean is, you draw in 1 hour, you check in 15 minutes. You can draw in 15 minutes, you can check it in 5 minutes. I mean this. Now let's do the same in 5 minutes, friends. Let's do it like this. Let's delete them. Again, this is the first peak that caught my eye. I open my Fibonacci here first. I take it from the top to the bottom, friends, just like this. What am I doing now, guys? As you can see, I'm drawing my support resistances right away. This is a support zone. Here's a resistance zone. One more support zone at the bottom. So if possible, I can buy goods from here too. I draw it here too. Now I'm closing my screen, my Fibonacci. I open my other fib extension. I'm setting my crown again. This is it. This is my bottom, that area. And again, this is my top. In this way. Okay. What am I doing now, guys? As you can see, there is a resistor in my fin extension, by the way. And it's stuck on the resistor. There's a resistor in between. Now let's change the color of this. Let's throw a resistor over there. Now, where else is the closest? There's this. Right, that area. As you can see, guys. Again, I made a channel for myself in a very nice way. What did I do? I marked this place black. The Fibonacci extension, that is, the place where the possible decline can come. Look, as you can see, we can see it at the instant price. By attaching to the resistor in between, that is, by attaching to the fib extension. Price goes down. If I place an order here, I buy from here, same way. I enter my order on the bottom, I also place the order on the bottom in the same way. So in fact, we don't need to rush when we trade. The biggest reason why we lost, we are in a hurry. We dive right in, not knowing where the price is. And we hurt. I hear from everybody. Price drops when I buy. Price goes up when I buy. That's wrong. You don't know where you're getting in the price. So you don't know where you buy from. If you're buying here, the price already drops. If you are buying above the resistance again, price will drop again, so your price can go up after you buy. You need to order the supports. You make an average by entering orders. You sell as soon as your nearest average is profitable. I give an example here. You make a purchase. You stop here. You lower the averages here. Here you get $2, $3 stop. And we're afraid to stop. We are losing $10 because we will stop for $1, friends. Please obey stop losses, obey trailing stops. If you don't stop, you can lose all your money. So you have $100. At that moment, there is $1 or $10 stop. You become a $100 stop. This time all your money is gone. After that, you say you failed, you say you're done. So our purpose here is not to make money. How can we manage our money? So how can we make a profit with our money? We need to know that, and we need to know how little we're going to get out. So how much loss can we get out of this transaction? We need to know this, guys. I hope you understand what I'm saying. As I said, in the training video I described, nothing is in the nature of investment advice. Do not open trades by following these, friends, you may lose. It is purely for educational purposes. I hope you like it. That's all I want to say. Take care of yourself, bye. I wish you good luck, see you.